On the line, the host of the Kudlow Report on CNBC and the Larry Kudlow Show on WMAL Saturdays at 7. That would, of course, be Larry Kudlow. Larry, how are you?
Good morning.
All right, so, we went through a rough patch in the stock market not long ago, but it seems that it is slowly recovering. We're back up above 16,000. I know you're always one of these guys who takes the long view that investments are not short-term, but they should be long-term, and I agree with you on that. But do you have any sense of how the market has recovered and what it means?
I think that one of the key points is profits. And this has sort of been overlooked. I guess everyone obsesses about the Federal Reserve. Don't forget profits. Profits, I call them the mother's milk of stocks. And, the fourth quarter, which I know is over, but that's the results we're still getting. Fourth quarter is coming in, A, stronger than people thought, and B, the best in 2 years. And if you look around some of the measurements, unit labor costs, the cost, let's just think of it as labor costs, okay? Labor costs are very low in this cycle. And we don't have much inflation, but prices are higher than labor costs. And that's a very positive margin for profits. And I know that's a bit technical, but profits are so important. And I can't throw the towel in on this cycle until I see a real decline in profits, and I don't see one.
But Larry Kudlow, and yes, lower labor costs are great for profits, and that ends up being good for the stock price, but it's bad for the people who are making those wages and bad for all those people who have left the job market. And Janet Yellen seemed to express concern about that in her testimony last week. But she doesn't have much control over labor, does she?
She does not, and I wrote a column on that. I do think the labor market is soft. I think it's been soft. I think there are a lot of reasons for that, but none of them are Fed reasons. I think if we'd stop blocking investment, we'd be in much better shape. For one thing, I think our tax system stinks. We have the worst corporate tax among the OECD developed countries. We have the highest capital gains tax, or nearly the highest capital gains tax. I think all this attacking of the EPA, for example, going to knock out the coal industry. I think Obamacare is a wet blanket over the whole economy. Yeah. Obamacare, I know they're making changes on every other day, and some of this stuff may wind up being unconstitutional. But look, if you're a business, even a small business, you are not going to hire for 2, 3, 4 years, which is what, that's what guys like to hire. That's what CEOs.
Yeah, you got to
hire for 90 days, usually, okay? You don't know what's going on. You have no idea what the fines are going to be like, what the mandates are going to be like, what the rules are going to be like. And if you add on to that some of these other regulatory wet blankets, like, for example, in banking and bank credit and bank loans, the Dodd-Frank bill is still it's been several years now, and they haven't figured out the rules in the Dodd-Frank bill. But what they have figured out is how to stop banks from making
from lending. Yeah, and so now, Larry, let me paint a quick hypothetical for you. Soft job market as it is, still a mystery about Obamacare, and that's still rolling out. The worst of it is yet to come in terms of the employer mandate. Then you've got the Fed tapering down the quantitative easing with all the bond purchases they've been doing. Isn't this a recipe for either inflation or higher interest rates or a major downturn?
No, I don't see the inflation. What do you mean?
Well, if they're going to stop buying all the bonds that they've been buying, aren't we going to get back to some actual real costs of things because it's sort of been artificially deflated by now?
No, most people make the other argument that the Fed is inflating. I don't make that argument. The Fed has flooded the banking system with reserves, but the banks haven't used the reserves. That's really the key. That's why they got to get out of the bond business. That's why Yellen is smart to continue Bernanke's policy. This money is just piling up at the Federal Reserve, and it's called excess reserves. They're not being used by the banks. I think there's $2.5 trillion in excess reserves that the Fed has pumped in and is not being used. The inflation measure, M2, for example, is only growing about 5.5%. That's nothing. We haven't had inflation. Let's face it. It's funny. The Republican Party, I thought, made a big mistake in the last presidential election, accusing of Bernanke of inflation. All right, but it's not true. The money never circulated through the economy. Yeah. The faster she gets us out of quantitative easing, and the faster she gets out of normalizing interest rates, particularly short-term rates, I think the better that's going to be. It'll create less uncertainty, and people will be able to assess risks better. Right now, the Fed is stifling interest rates, and by the way, they're sort of channeling it all to the large corporations and the large investors.
I feel better now. Thank you.
That's the best. Believe me, the faster they get the hell out of the money market, the better off we're all going to be, and you might get better economic growth. But I got one. Look, eliminate the corporate tax. Just eliminate the corporate tax. You know, one of the studies shows, this Lawrence Kotlikoff study, we're talking about wages, right? Low wages. The corporate tax reduces wages because companies don't really pay taxes. They just collect them. And when they send them to Washington, you know where they find the money to offset it? Lower wages.
All right.
And this is one of the worst things that's happened here, and it's one of the reasons why the workforce is not getting paid as much as it ought to get paid. So how about just abolishing the whole corporate tax?
I got 30 seconds. Quick question. The president and the vice president are going out and they're going to talk about 5 years ago, the economic stimulus, $800 billion, something that they believe we should celebrate. Should we?
This is the slowest recovery since post-World War II. That's the number. Now, whether it's because of the stimulus, which didn't work, or the uncertainty about the Fed or Dodd-Frank or Obamacare or 100 other reasons, here's the problem. You're a businessman, right? You should be making long-term investments. You should be hiring hundreds of thousands of people. Outside the oil and gas fracking business, people aren't doing it. They don't know what the federal government's going to do. They don't know what the next rule is going to be. They are pulling in their horns, and that's why all this rigmarole of stimulus and regulation and the rest has been an economy stopper.
We got to leave it right there. Larry Kudlow, thank you.
Thanks, Larry.